Hello Keystone Investors, welcome back to another video. In the dynamic world of digital assets, there's a term that's been making headlines and capturing imaginations worldwide: NFTs, or non-fungible tokens. Now, unlike cryptocurrencies such as Bitcoin or Ethereum, which are fungible and can be exchanged on a one-for-one basis, NFTs are unique. Each NFT has distinct information or attributes that makes it irreplaceable or impossible to exchange on a like-for-like basis. This uniqueness has led to a surge in their popularity, especially in the realms of art, music, and collectibles. Digital artists are selling their works for millions, and rare collectibles are finding new life in the digital realm, all thanks to NFTs. But the potential of NFTs extends far beyond the digital art gallery. Imagine a world where physical assets like real estate properties can be represented on the blockchain. This is where the concept of tokenizing physical assets comes into play. Tokenization is the process of converting rights to an asset into a digital token on a blockchain. In the context of real estate, it means turning a tangible property, like a house or a piece of land, into a digital representation that can be bought, sold, or traded, much like a cryptocurrency. The implications of this are profound, offering a blend of physical and digital worlds and unlocking new possibilities in the world of real estate investment. Tokenization in real estate is a groundbreaking concept that's bridging the gap between a tangible world of property and the digital realm of blockchain. But what does it really mean to tokenize a piece of real estate? At its core, tokenization involves converting the value of a real estate property into a digital token. Think of it as creating a digital twin of a property. Instead of a lengthy deed or title, you have a digital representation that encapsulates the value and ownership details of that property. This digital token can then be divided, bought, sold, or traded, much like shares in a company. Now, while the idea of representing assets digitally isn't entirely new, the use of NFTs for real estate tokenization is what sets it apart. Remember, NFTs are unique. Each token has specific information that sets it apart from other tokens. In the context of real estate, this means that each property token carries with it a detailed record of the property's history, ownership, value, and any other important details. It's like having a comprehensive digital fingerprint of a property. But why is this so significant? For starters, using NFTs for real estate tokenization promotes transparency. Every transaction, every change in ownership, every detail is recorded on the blockchain, ensuring that the property's history is clear and indisputable. Moreover, NFTs enable fractional ownership. Instead of one person owning a property outright, multiple people can own fractions of the property, represented by tokens. This democratizes real estate investments, allowing more people to participate and invest in properties they might not have been able to afford otherwise. The fusion of real estate with NFTs isn't just a trendy blend of the physical and digital worlds. It's a move that brings with it huge benefits, reshaping the way we approach property ownership and investment. Tokenizing real estate offers easier access to liquidity. Traditional real estate transactions can be time-consuming, often taking weeks or even months to finalize. With tokenized properties, owners can quickly convert their assets into liquid funds by selling their tokens in the open market. It's a game changer, especially for property owners who need quick access to capital without going through the lengthy processes of selling a property in the traditional sense. Then there's fractional ownership. The world of real estate has often been seen as a playground for the wealthy, with high entry barriers. But with NFTs, this is changing. Tokenization allows a property to be divided into multiple tokens, each representing a fraction of the property's value. This means that instead of a single investor owning a property, multiple investors can now own pieces of it. It's a democratizing move, opening up opportunities for smaller investors to dip their toes into the real estate market and benefit from its returns. The benefits don't stop here. Tokenizing real estate leads to streamlined transactions and reduced costs. With smart contracts automating many of the processes, there's no need for intermediaries like brokers or agents. This not only speeds up transactions, but also significantly reduces associated costs. It's a more efficient and cost-effective way to handle real estate transactions. Lastly, tokenization offers global market access for property sales and investments. In the traditional setup, investing in overseas properties can be a complex affair, riddled with regulatory hurdles and logistical challenges. But with tokenized properties, these barriers are lowered. An investor from, say, Europe can easily invest in a tokenized property in Asia, all from the comfort of their home. It's a move that's expanding the horizons of real estate market, making it truly global. So in a nutshell, the benefits of tokenized real estate with NFTs are profound. It's a paradigm shift, offering a more flexible, efficient, and inclusive approach to property ownership and investment. The concept of tokenizing real estate using NFTs isn't just theoretical. It's very much a reality, with several platforms leading the charge in this innovative space. One such platform is Realty. This platform allows to purchase shares of real estate properties in the form of tokens. Each token represents a fraction of the property, and holders earn a share of their rental income, paid out in cryptocurrency. What sets Realty apart is its user-friendly interface, making it easy for both seasoned investors and newcomers to navigate the world of tokenized real estate. Next on the list is Ethereum. Ethereum's approach is a bit different. Instead of focusing on real estate, they aim to tokenize all sorts of physical assets, from real estate to art. But their work in the property sector is particularly noteworthy. They use smart contracts to ensure that the digital ownership of the token truly reflects the legal ownership of the property. It's a blend of digital and legal worlds, ensuring that token holders have genuine rights to the property they invest in. Myco is another platform making waves in this space. Myco's unique selling point is its focus on sustainability. They aim to tokenize eco-friendly real estate projects, allowing investors to not only earn returns, but also contribute to environmentally sustainable initiatives. It's a fresh take on real estate investments, appealing to the eco-conscious investors. And lastly, there's Keystone Investors. This platform specializes in tokenizing luxury real estate properties. Investors can buy tokens representing shares in high-end properties, often in sought-after locations. Keystone Investors also offers a secondary market, allowing users to trade their tokens, adding an extra layer of liquidity to the mix. Now, these platforms are just a glimpse of the broader landscape. Each brings its unique flavor to the table, but the underlying theme is consistent, making real estate investments more accessible, transparent, and efficient through the power of NFTs. Now, while the world of tokenized real estate is brimming with potential, it's essential to be aware of the challenges and concerns that come with this territory. One of the most significant hurdles is the regulatory landscape. Different countries have varied stances on tokenized assets, and the legal recognition of these digital tokens is still a gray area in many jurisdictions. This uncertainty can make it challenging for platforms and investors to navigate the space without fearing the potential legal repercussions. For investors, the decentralized nature of blockchain brings both opportunities and risks. While tokenized real estate offers more accessibility and transparency, it also requires investors to do their due diligence. It's crucial to understand the platform's credibility, the authenticity of the property listings, and the legal framework governing the tokenized asset. Without this knowledge, investors might find themselves in uncertain situations. Security is another paramount concern. Digital tokens, like all digital assets, are susceptible to cyber threats. Ensuring the security of these tokens, safeguarding them from potential hacks, and ensuring the integrity of the underlying smart contracts are all crucial aspects that platforms and investors must consider. Now, looking ahead, the future of NFTs in real estate is promising. As technology evolves and regulatory frameworks become more defined, we can expect tokenization to play an even more significant role in the real estate industry. Innovations are on the horizon, with platforms exploring more advanced features, better integration with other financial tools, and enhanced security measures. The goal is clear: to make real estate investment more inclusive, efficient, and in sync with the digital age. And that brings us to the end of this video. In conclusion, the journey of integrating NFTs into the real estate sector is a testament to the innovative spirit of the digital age. While challenges exist, the transformative potential of this fusion is undeniable. For those curious about the future of real estate and finance, this is a space to watch closely. Stay informed, stay curious, and explore the endless possibilities that tokenized real estate has to offer. That's it for today's video, and I'll see you in the next one.